Hey guys, what's up? This is Andrew for TRENDLINES.com. So for those who don't know me yet, I'm a professional trader and I'm doing YouTube videos where I try to show you guys everything I know about technical analysis and about analyzing financial data to build up your scenarios and set up your trades. So in my videos, I try to explain as good as I can. I hope this helps you guys so that you can use the same techniques that I like to use at work to make money on the markets. So in today's video, I want to make a big update, guys, on Gamestop and show you some cool option strategies that you can make. So let's get into it. So let me remind you first the situation. So I'm using a lot of ELLIOTT wave counting. I associate this with FIBONACCI to find my targets. I associate this with trend lines, of course, which is the basis. I try to spot the breakouts, then I use the breakout techniques that I show you guys many times. You wait for confirmation, you buy the retest using fibs, using moving averages, using the trend lines that you have used to find your breakouts, and then you enter your trades. So here, ELLIOTT is telling us that, we went to 250. Now we're consolidating, so the volatility is not very high. You can see that Gamestop has a lot of energy, guys, a lot of energy, all right? So AMC right now, I do those two together. AMC is the time to wait for me and to sell maybe call options to buy later the lowest strike and get a free call spread. For Gamestop, we are not in the same situation, guys. We just had the first wave, so now I think, not sure it's complete or not, but it's going to be complete soon. Then we're going to correct, and we are not very high yet. We are just above the breakout level, so it's a actually nice opportunity to start loading some calls. Guys, the volatility is high, but it can be much higher, as we can see for AMC. So I would actually try to buy the dip here around maybe 220. Not sure this has a hold or not. I might have 1 day or two delay. But once again, it's not very important here. I'm giving you some strategies on the longer term. I think that, 220, it will probably hold, but, we need to retest this trend line sometime. So eventually it might break. I'm not sure, but I would be a buyer here and I would add some more position at the 190. I would be basically a buyer in this whole area, guys. So what we can do here, guys, is to go on the option market, GME. Go on the, once again, I expect some moves to come within 1 or 2 weeks, so we have some time, but it can come earlier. Once again, maybe in a few days we're gonna have those strong moves as well to come, so that's why starting to load some call options right now is actually smart for me. Okay, so we can go on the July maturity, guys. And as I said, what I like to do when we are not far from the breakout level, I like to start accumulate some long call positions. So for example, here, I don't like to buy the very out of the money strikes. This is a valid strategy as well. If you want to get the maximum of explosivity, this is what you need to do. If you want, basically, if you believe in the squeeze very soon, the 800 strike is the right strike to buy, even if it's very expensive in terms of volatility. What I like to do, guys, is actually to do something that is more, close to what I do at work. I would actually buy those lowest strikes, maybe around the 400 level, 300. So let's go to the 400 level, for example. This one costs 20, all right? And the 800 costs 780. And then you accumulate, guys, some 400 strike calls. So let me show you how this looks. And let me show you the complete strategy. So once again, it's a strategy you can do in different steps. I showed you this butterfly, guys. So this butterfly is still a very nice strategy to do. 500, 600, 800 butterfly, 2 by -3 by 1. So it's a bit not symmetrical butterfly. Go check my other videos, guys. For 200 USD, you can make 20. So this is very nice strategy because you actually use the fact that the upside volatility is very high. Here, let's say we accumulate some 400 strikes. All right, so here we have 0, 0. Let's say we don't have any shares. This costs 20. So this would cost you, let's say you buy 2,000 US dollar. So I know it's expensive, guys. I know it's expensive, but you're gonna see we're gonna actually bring back this level to a very more decent premium. So you start buying the 400 strike, and if it goes lower, you accumulate. So if it goes lower and then you can find this price at 15, you buy more. it's actually very expensive, but you can buy some fractions of this if you go on other exchange, on using some brokers, if you don't do it directly on the exchange. And then you're gonna buy maybe a second one, I don't know, but let's say you accumulate for an average price of even 17, because you buy some at 20, then maybe if it goes lower at 15. And what the strategy consists in is actually then when the price action is going to go higher, let's say it takes 50, 100%, which I think is going to happen within 2 weeks, maximum 1 month, even maybe before. But I think we're going to have some some correction coming this week, a consolidation at least. And then you go to the 800 strike, guys. Once this goes higher, the 800 strikes right now cost 8. But if GameStop takes 50%, it's gonna cost probably around 12 or something like this, you know, even maybe 13. So let's say you can sell it at 12 and then you sell it at 12. So once again, it's a risky strategy because you're not sure that if GameStop doesn't go higher, you're just going to lose your premium. So that's a possibility. You need to be aware of that. Here, once again, I'm on July maturity. So this needs to happen soon, but I think this would happen soon. And then you sell this one and you buy your call spread for a very decent price. And once again, guys, look, for only 500 USD, you can make up to 40 if GameStop goes to 800 or more. So you might tell me that this scenario is far for now, but it was far as well for AMC, and we did it in 1 week. So there is a lot of bullish momentum in this market. So this is the kind of strategy I would make that I think are very nice, because if you do the call spread right now, guys, it costs you twice as much as if you do it in different steps. But there is more risk doing it in different steps. But when you know technical analysis, it's actually easier to time your entry in this call options. You buy it when you are close to the breakout levels. And once the move happens, you take some profits by selling more upside calls, benefiting as well from the volatility that is going to go higher. If the volatility goes really, really higher, you can even sell it at 17, guys, and get a free call spread. You see? Getting a free call spread is a very nice move that, you know, is not easy, but it's very manageable. I can do it like, I don't succeed each time I'm trying, but I'm usually quite close to free call spreads. And once you have a free call spreads, you put it somewhere, and if the scenario happens, this is free money coming. So this is what traders actually do, I mean, on the option market. So that's it for me, guys. I hope this was interesting for you to understand how you can actually get a free call spread, so which is a free option on the upside, and you can use these techniques in different situations. If the price action is already high, you first sell the upside option and then you're going to buy the lowest strike. Or if the price action is close to a breakout level, like for GameStop, you start by buying, accumulating, and once the move happens, you take your profits by selling the higher strike. So I hope this was clear enough for you. I will do more videos like this. I would, of course, update you with the fresh price action during the week, as usual, probably Wednesday or Thursday. And I hope you enjoyed this video. So if you did, please don't forget, guys, to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.